It's Friday already, Pat. Welcome, welcome.
Hello, Rick. I love this. I love my microphone. I feel like a DJ.
Okay, it's 55 degrees outside. You're listening to WPAT Radio. Uh,
WPAT.
so, for the people that have just bumped into us that are not subscribers and you're watching some Shania Twain video, and then here come these two guys. Like I say, Shania Twain, but only 12% of our audience is female. So, what do? We actually show you the real Arizona numbers and we talk about what it might mean. We don't make any wild predictions, but we have access to a lot of things that the average Joe doesn't have. And so we're just trying to make sense of it all based on what we know, and so that you can make good decisions. And like Pat and I always say, so that you can be armed with information and knowledge and be a hit at all the cocktail parties. Right, Pat?
Yep, yep. Or as I say, we're drowning in information and starving for wisdom.
That's right. So, if somebody says, "Hey, I hear the market is," then you know what to say. Now we had 3 people watching, and after I just explained what we do, 2 of them dropped off.
That's in the millions right now.
Okay. Yeah, it's in the millions. Yeah, go figure. So, looking at the numbers, I'm kind of starting to see a trend, and it's encouraging for buyers, and it's not panic time for sellers. So I'm going to go into a little detail on that. We have the Cromford Market Index that I'm always referring to, which is this here, and it's showing that they're declining 10% a month, 24% a month out in Glendale. And it says the market's working pretty much as any economic student would expect. Higher prices reduce demand and tend to encourage more supply. So it's supply is still very low and by any standard, but it is clearly rising, largely thanks to a healthy dose of new listings. So I wanted to kind of dig in. And then they put a chart down here that I talked to you about yesterday. I don't understand for the life of me what they mean on that one. And they said, however, we should still remember that a CMI over 300 is still extraordinary and predictive of yet more price increases. So as you can see, anything over 300 is extraordinary, and we're still in the 460s. So prices aren't coming down anytime soon, right? Mm-hmm. So if I go and look, and I take a look at some of the numbers that they show, and then I go back and I look at, let's see, is that the one I want? This is what I want. This is the one we went over last week. And we see that the market index is turning, right? Mm-hmm. And it's turning at a pretty good clip. Look at the velocity of which it went up. This is after in March they told us to stay home, and then now it's turning. It's kind of matching 2005 in velocity. Mm-hmm. But supply, in order for that to change, both numbers have to change. Supply has to come up, demand has to continue going down. So I kind of monkeyed with that a little today. And down here, you see that supply is very slowly coming up as an index, right? So tracking it as an index, today we have 5,624 listings, which is about 500 more than last Friday. Mm-hmm. 4,353 homes came on the market in the past 7 days, but only 3,803 went under contract. And that's a number that I want to focus on here for a minute. My handy dandy little chart here, Pat. See the blue wave we got going here? Mm-hmm. Notice how new listings coming on in blue were pretty much trailed by contracts. But now it's missing the mark by about 450 to 500 a week. So we have more listings coming up than are being gobbled up. Not enough that anybody's going to feel it yet. Mm-hmm. In fact, the average person isn't even going to see this. They're not going to know that this is coming. So the question that comes to my mind is how aggressive is this, and when can we maybe expect to go back to a normal market? So I looked at the Cromford numbers, and they were showing 10%. So I looked at Gilbert, right? If their Cromford index is like 447, if they go down 10% a month, that index in Gilbert will be a normal market by January. December, 6 months. So I took that same scenario with these simple little numbers and my lousy graph charting here. And I said, if our listings are always eroding and we're not making the mark by 550 units every 7 days. So if sales stay right here, Pat, listings keep coming on, you can see that in this chart that in 6 months, we're up to 18,000 homes on the market. Somewhere around the middle here, the bidding wars stop. The prices still go up, but not as aggressive. So if this pattern sticks and stays, then we could see a slow walk towards normal.
Do you think, look at the blue, I mean, the blue, is that your hypothetical chart?
Yeah, that's taking these listings here.
That's a perfect world.
Yeah.
But no, it looks good. I mean, it makes a lot of sense. I mean, we're seeing, just to jump in, I mean, I read the article real quick on our trusty Mortgage News Daily that they said that second homes are kind of seeing a little bit of a, they're a little bit of pullback. It said second home sales react to high prices. I think you're going to see second home sales and vacation homes see a little pullback because it's not a necessity.
Yes. And and you got scarcity.
Yeah, you're scarcity. And if you see people looking for a second home, if you look, obviously just Joe and Mary Smith are looking for a second home and they see prices, they're going to, it's only really common sense that they're going to look at this and say, hey, this is getting out of hand for our second home. We're going to pull back and wait.
Yeah.
No.
So our question here is, how do you think people would stop selling if the prices are dropping continuously? There's no indication of a price drop. There's an indication now that we may be approaching normal, but I don't see a price drop. So now, if after a year from now we start seeing price drops, it all depends on their situation. I mean, we've had plenty of sales while prices are going down. In fact, I did a survey on our YouTube channel here, just asking people and see if I can find it here, but it'll make some noise if I do. 43% said they don't want to sell because they're afraid they can't find anything. Well, if prices kind of start coming down a little bit on the home they're selling and the home they're buying, but there's more homes to choose from, then I think they'll sell. Because 43% are saying, I'd like to sell, but I'm afraid I can't find anything to buy. So a year and a half from now, maybe prices start dropping, but they've already gone up at an 18 and a 30 and a 35% clip. They can afford a little pullback, especially if they start seeing more inventory, wouldn't you think?
Yeah, no, I think so. I agree with you there. I mean, it's going to be a trickle down effect, but I mean, the first pullback, like we've been talking about the last couple of months, and like I said, this is all, we're just talking, I mean, you and I sometimes talk based on our experience of, 22, 23 years, me being a mortgage broker and then stock, 34 years total in markets. But I think what I'm seeing, my gut tells me, reading all these articles, reading all this information, talking to these people, that the first pullback that we're going to see, we're not going to see prices go down, but we're going to, like you said, we're not going to see those ridiculous bidding wars, $30, $40, $50, $60,000 over the offer price. I think we'll see, that's going to be the first tapering, I think, is the craziness on the bids. I
think so too. And we see here that housing market update, this from Redfin, pending sales continue to slow, but they're still up 29% from last year. Yeah. So we're saying slowing, but it's still cranking, folks. And here's the chart. It almost looks like the Cromford Index, doesn't it?
Well, the thing of it is too, when somebody hears or sees information, they're all, the average person in the public, us, you're automatically going to say, oh, we're in for a crash. It's starting to crash, and then, there's still going to be people out there looking for a home. There's a lot of demand out there. Like you said,
there is.
Until, I mean, do you want me to jump into that one point that I talked to you about?
Yeah, let me run over this real quick.
Okay,
first,
go ahead.
And then we'll get done. And for folks that don't know, this is redfin.com, and they're known for their data. They get a lot of data when people go trolling around their website. So they're saying, how hot is the Gilbert market? Very competitive. They gave it a score of 87. And then it shows you the sales to list price, homes sold above list price are 73.2. So that's one of the hottest in the valley right now. And so 70% of the homes are going above the list price. But here's the interesting thing I found. I didn't know what they did. Was you've got this thing called Market Insights from Gilbert Real Estate Agents. Well, they're Gilbert Redfin real estate agents. And so they're putting in what happened to their offers. This guy submitted a $500,000 offer and it sold for $600,000. And he said, seller accepted a cash offer for $600,000. There were several financed offers above that amount. So there were financed offers above $6, but they chose the cash because they didn't want anybody, I don't know, wigging out on appraisals or something. And so his offer was not accepted. Here's one $650 offer, not accepted, sold for $650. And Kathy here says, even though this was a cash offer, hers, the sellers preferred a higher offer that waived many contingencies. So they probably went in with an appraisal gap and probably waived the inspection. Here's a $350 offer that sold for $375 and just says offer not accepted. Doesn't say why. And then she says $425 offers sold for $450. And you can go city to city and see that. So it's pretty, Devin says, how current is the Redfin data? Zillow seems to be pretty lagging. Thanks for everything you do. You two do. Thanks for watching. It's a lot better than Zillow's data. It's a lot quicker. But it's interesting to kind of drive that bus around and take a look. So if you're, as I talked earlier in the week about how do I price my home? Hey, the market's going to tell you. I mean, right?
Yep. And those Redfin comments, and I think those are pretty interesting because it gives people a flavor of, what, because remember I told you about the agents get tired of agents that just, they get, listing agents that have 30 offers. But it was like that one agent that you had talked to that kind of walked you through and said, hey, this is what you probably need to do to get the offer accepted. And a lot of listing agents are not being very helpful from the fact it'd be nice if they educated the buying agent to say, hey, Joe and Mary Smith did not get this offer because of this, this, and this, and this. All they do is they either don't call you back or they say, nope, you didn't get your offer accepted. And being a buying agent, I would imagine, and I've heard this from buying agents, that the listing agents are being very rude. They're getting cocky. They're rude. You think they give them some feedback, say, hey, you were close, but you missed out by, just give them some feedback. I think it would help everybody.
Help out the other agent, for crying out loud. I mean, there's a reason that we have rules and ethics in our association. So tell me what that information was that you saw that you wanted to, are you able to share your screen there?
No, it doesn't. I really don't have to, but I'm just, okay. I've been harping about the fact that, people say we're going to see, it's interesting. People say, oh, we're going to see a crash. We're going to see a crash. It's like, I tell them, there's no really backing up when they say that. It's like, well, if somebody gave me 3-point bullet points of why they thought that, and then, okay, I can certainly understand it. But I've been harping on the fact that 2008 or this time frame now is not like 2008. And this article had mentioned this, and I kind of forgot about this, which is a great point. Number one, they said that this is different than 2008. Now, first of all, the bank failures, to tell everybody, back in 2010, 9, 10, and 11, there was 140, 157, and 92 bank failures. In the last 3 years, we've had 0, 4, and 4.
Wow.
Compared to 9, 10, and 11. So 18, 19, and 20, we've had 8 bank failures compared to, almost 400. But they said one of the big differences, and I never really thought about this, but they said that the rules did change. If you think about it, back in 2008, they had that TARP money, basically the Trouble Asset Relief Program, where the government gave banks about $700 billion to. Obviously, it was a top-down approach. They gave the banks $700 billion, and they were supposed to trickle it through the economy. And $700 billion, not all that was used. And it did not act, basically, to help the homeowners. And hence, millions of people lost their home, right? The money just did not trickle down.
Yeah.
But this time around, if you think about it, it has been a bottom up approach where the government basically, obviously, we had the $5 trillion payment, the payment PPP program, the unemployment benefits, the forbearance. They're on top of the forbearances. People are getting checks, so they got the money to the bottom of the economy that helped support it. And I think that is obviously a big. I've never really thought about that point until I read it. I'm like, God, that was it from a top down versus a bottom up approach on the money where it was going.
Yeah, yeah, and this was
And
this was a shutdown versus an economic hiccup. So
yeah, and another thing is too, an interesting stat is the equity gained. There's been 20% in equity gain since the first quarter of 2020. There's been $1.9 trillion in equity gain in house value.
yeah,
So, I mean,
yeah.
we've got
So
a lot.
there's no foreclosures coming because of forbearances. I mean, and 61,000 dropped off this month. So
Yeah.
it's just not happening. I got a question here from Jeremy. He says, looking to buy my first place. Any advice in this market? I put in one offer in Tempe at list price. Realtor said it was looking good, and someone paid cash offer above. This was in early April. I don't think anybody's getting anything at list price right now, unless they just listed it way too high. But that's the market. Advice. Well, if you wait, prices will be higher. But according
Rates
to
will
the
be higher.
trends, rates will be higher. But maybe the bidding wars will have tamped down, so you won't need as much cash to close any gaps, such as appraisal. So you really have to measure a lot of different things. And in your situation, if you're trying to get something in Tempe, just keep swinging your bat, but know that, submitting an offer at list is you're not getting a leg up.
No, my advice being a mortgage guy, I mean, my advice is obviously number one, I think rates are going to eventually pop up here. Inflation is, I think, going to be more transitory than people expect. I'm seeing a lot of talk from the government saying, and I know I agree it is going to be somewhat transitory, but they're doing a lot of this transitory. Yeah, it's going to be transitory, but what if it isn't transitory and it's baked into the economy a little bit more? I think I'm kind of reading the tea leaves between what the feds are saying is that they're trying to say this so that, I mean, this is just my reading and just reading between the lines, is that they're trying to say this is going to be transitory to it's kind of like their tapered tantrum. Because if they come out and say something crazy,
the markets will blow up. Yeah.
Yeah. So they're like, hey, this is going to be just transitory. Don't worry. We'll get over it. I just don't see it happening. I think it's going to be longer than what we anticipate. But and to answer is, I mean, my advice is, number one, what I'm hearing from other agents, yourself and you just got to be patient. The low hanging fruit's gone. You got to be patient. You got to be persistent. You might have to put 15, 20, 30 offers out on a property if you're really interested in buying something. And if you do find something that's, you're really interested in, like you've had a couple of clients that like, you say, hey, we got to go in at a full offer at 400, or, if it's house is listed at 400, we got to go 405, 410. But you have these clients that take the bat out of your hands and say, oh, let's offer 395.
Then you're dead on arrival. Yeah.
Yeah. If you have something you like, don't nickel and dime the offer, because you're going to lose opportunity costs and looking for a house. If you spend 3, 4, 5 months looking for a home, what does that cost to you? If you're looking to try to underbid by 5, 6, 7,000, it's not worth it.
No, because you're going to end up bracketing and getting into higher prices.
Yeah.
And so you've lost something because you wanted to get it 5,000 lower just because it makes you feel good. But that 5,000 financed over 30 years is nothing. And
you got to look at the big picture.
So,
I think a lot of clients, what I see is a lot of clients, I mean, no offense, but they take the bat out of the realtor's hands, the realtor that's been watching the market day in and day out. And they're just, the average client that's working, a job, they don't see the activity that you're seeing. You're like, hey, I know, you obviously I'm looking at you, you're only trying to give the client advice because you want to see them get the house, and you're not trying to bid it up or get crazy. You're trying to
sometimes I just tell people to walk away. I mean, you call the agent and go, how many offers you got on this thing? And they give you the numbers. And I've told clients, you're not going to be able to get this. Let's not even
Yeah.
try. And
But I think
that
my
sounds like a
biggest thing,
give up attitude, but math is math, right?
yeah.
So,
But
so
like you said, my 2 cents is be patient. The low hanging fruit is gone. I mean, there is stuff out there. You just got to be patient. We're not in a market where you can go out on a Friday, find a house on Friday, put a contract on Saturday, and be rolling by Monday. It's just not happening. But just be patient and don't nickel and dime. If you like something, it's kind of like that. If you like, you go to a store and you like it, if $50, like an item that's at $50, but you're like, hey, I'm gonna wait till it's on sale at 40 or 45 and it's gone and you can't buy it anymore. It's like, shoot.
yeah. The real estate market's like Costco. You get into Costco and you go, "Ooh,
Oh
I
yeah,
like that. I'll buy that next month." It
I'm gonna
ain't
buy that
there
next
next
week.
month.
It's gone.
Yeah, it's gone.
It's like, where
Uh,
they put it?
Renter households not caught up on rent need rental assistance. This is an article from the National Association of Realtors. Nearly 6 million renter households are not caught up on rent, and they need 3.4 billion in monthly rental assistance to avoid potential eviction. And it shows it by state. Now, they made a math error in here, I read. It says nearly 2/3 of renter households were not caught up on rent, earn less than $35,000 a month. That was probably a year.
Mm-hmm.
If you can't pay your rent, you're making $35,000 a month.
Yeah.
You got bigger problems than we can help you with.
Yeah.
But here it is by state. So Arizona, 7.7% are behind on rent. But you know what? We don't know what the normal rate is. Maybe we consistently kind of hover around 5% anyway. It's kind of like the forbearance, the delinquency on loans now, even though it looks like a big number, is on par with what the delinquency was before the pandemic.
Yeah.
So there's always a certain number of people that are behind, on any financial transaction. But as a state, we look like we're doing pretty good. We're not Mississippi with 26.7% behind.
Damn.
Florida's 19. You've got South Dakota, I think, is the lowest here at 3.4%. And so Utah's right there with us. Nevada's up at 9.4, California 15.6. So there's the chart that shows how everybody ranks. The two not surprising states of California and New York. So that's a number people are going to watch on how we wring out of that more so than forbearances, because it's more households.
Yeah.
And nobody can predict what's going to go. I mean, we have no experience in a country shutdown. We just, there's no way to look back and say, okay, the last time we shut everything down, here's what we did to get out of it. That's why it's impossible to predict the market. We have no idea what's going to happen except to show you and say, well, here's a number that might indicate this, right? So
but I think we got some experience. I mean, with, I guess, the blessing of the 2008-9 crash, we've got something to at least, we got something kind of compare.
Yes. Yeah.
Because if we didn't have the crash in 08-09, we'd be on uncharted waters as far as what the hell we're comparing right now.
Yeah, it's tough. I'm going to pull up Tempe here for a minute. I only remember one zip code, 85281. So let's see if I can find it. And I'm looking. I think I just scrolled past it. I can get on here so you guys can see what I'm doing. 85282. There we are, right there. This is number of homes that are selling over their list price in this zip code in Tempe. So 60% of them are over list. And if you're buying in 200 to 300,000, the average accepted price is 16,000 over. 300 to 400,000, 20,000. 4 to 5, 16,000. So go out shopping armed with this information and know that on average, if you're trying to get something between 250 and 3, 60% of those homes are getting $16,000 more than their list price. So you need to go out knowing the facts, need to be prepared. Now, this number is not coming down in certain cities. It's the month of May. This is May and June. It's still climbing. The number of homes getting over list price is not shrinking. So even though you're seeing these data points that say sales are starting to tamp down, that number's not changing. That one's not moved yet. And I think it's going to lag.
Yep.
I think it's going to be a while before people recognize that there's. I mean, let's be realistic. It's a 500 home difference between listings that came on and contracts. Who's going to possibly feel that?
Yeah,
Data
nobody.
walks. That's
Nobody.
it. That's it. So, would you rather rent out your second home or sell it in this Phoenix market? You mean
Hmm.
if you bought a home and then keep your home? That's I saw an interesting uh, video on that this morning. I can't remember. It was a national television show, and they were talking about that. That's part of the reason that we have such a shortage. Is it used to be that you would sell your home and then move into another one, and a lot of people stepping up have decided because the rent market's so strong that they're going to get their home and then they're going to rent out their old one, and so you don't have that
Hmm.
release of inventory that normally occurs. And so it's very tempting when the market's really hot to say, I'm going to hang on and keep both mortgages. Just be prepared to pay both mortgages because look what happened to the Airbnb people last March. They bought four of them, right?
Yep.
Spring training, making a
Yep.
killing. They're the smartest guys in the room. And all of a sudden, in one day, they're making five mortgage payments, the house they live in and the four that they turned into Airbnbs.
Yeah. I
And
mean,
so,
from a mortgage standpoint, people can actually, that's what people do, though. To make a long short of it is that you can obviously, if you want to buy another home, you can use the rents to qualify to knock your debt to income ratio. If your mortgage payment is 1,500 or 1,400, you can get somebody in there for 14, 1,500. That kind of basically wipes out that payment on the first home, so you can qualify a lot easier. There's some different qualifications, but that's a nut and bolts of it. But you can get a high. I mean, if you've got, I personally, if you got a home, if you want to looking to upgrade, if you can get a strong renter in there, basically it pays your mortgage for you. I mean,
well,
not a
yeah,
bad.
and if you've got a home that you're moving out on that's got a small note, and you bought something else, and now you've got really good cash flow on that, yeah, I'd do it.
Yeah, I mean,
I mean, if you're able to do that,
it's case by case, but definitely that's what people are doing. They're moving up. They're keeping that home. The house that they bought 8 years ago for 250, and they got paid down. Now they want to move up to a house that's 450, and they can still qualify. Like you said, that if you get a renter, you can basically use that rent to kind of negate it for qualifying purposes.
yeah, and it's so it beats going out and trying to buy another home just as a rental right now. So it's kind of
Yeah,
you
yeah,
know
you got
that
kind of a built-in rental right there.
yeah. So, but it all depends on your personal finances and how much the rent is versus. I know I've got a gentleman from Chicago that I helped his house in Anthem. He had a rental in there, and I had a client that wanted to buy a house, but he still had 6 months left on his lease, and he found a house. And I said, "Well, let me talk to your landlord." And I told him, I said, "Hey, how about if I find you another tenant and you'll get $200 more a month than what you're paying, than what my client's paying now, and you can release them from the lease, and I'll do that for you for nothing." And so we did, and so he got out of the lease. So when rent keeps going up, it's easier to get somebody out of a lease, unless it only if it's a private landlord. If it's your apartment complex or something, they won't budge. You could sit
Mm-hmm.
down with the math and go, but you can get $500 more a month if these guys move out. Nope, we signed a contract. There's no wiggle room there. But he had clients that he hit me up this week and said, my renter said that they may want to move. They're looking for something else, and they have to make up their mind in 2 weeks if they want to re-up the lease. And he said he was going to raise the price $200 a month. And I said, and I knew what they were paying. And I said, I'll bet you in 2 weeks they're going to come back and go, we're going to stay. And they did because they got out and saw what was really happening in the rental market.
Mm-hmm.
We're
Yep.
not moving. So, but now he's got positive cash flow. He's had it for 2 years now. So it's
Yep.
doing well. So rates,
Um,
when the inflation numbers came out, I mean, everybody's
yeah,
thinking,
can
it
I
was a
share my,
high number. Yeah.
can I share
Yeah.
the screen?
We thought
All
we
right,
were going
let's
to get
see.
spanked pretty
How do I,
hard.
let's see here. See here. How do I share that screen?
Well, you got to hit that share screen
Oh,
button on
here.
the bottom, and then I will put it up there. Adds it. There we go. Miracles do
All
happen.
right. Yeah. I mean, yeah, there you go. This is the last quarter on rates. This is basically this is the mortgage-backed 30-year 2.5 coupon. There's a 2.5, 3, depending on if rates move up. This is kind of like the benchmark that I've been watching. But basically, the 10-year is 1.45 right there. And but it's interesting. You look at this chart. It's amazing what you look at from a picture. This rates have been pretty much since May 10th for about a month. Have been been pretty benign. This is pretty benign movement, but you can see as the rates are something's going to happen because this line is converging. This line is converging. As these lines converge, they get squeezed, and rates either move up or down based on the squeezing of the lines. Every time the lines get squeezed, there's something going on. Now move this out 6 months. You can see that there's some, there's kind of consolidating. When this is going up, rates are going down.
Well, you're saying when the line squeezed, but it looked like they almost all crossed back in early February.
Yeah, it's this one right here. This is the 100-day. It depends on let's see. This is the blue line is a 200-day moving average, and there's a 100-day moving average, 200-day moving average, 50-day moving average. But once you start seeing a line like this line and this line, you can see how it's kind of getting squeezed together. They're starting to come together. But then I'll pull it out a year. That's a year.
Okay.
So you can see there's consolidation, and I'll go 2 years. So you can see in here, there's rates.
So it can go either.
This is
so
obviously
it can pop out and go either direction then.
Yeah, it looks like it's consolidating right in here. My gut feeling is that we've been seeing rates in the high twos with inflationary numbers. I think this chart is going to go down because that's when bond prices go down, rates go up. And this is I just don't see the news where rates are going to go down further. It's been kind of consolidating. When it consolidates like this, and maybe I can use this as kind of a prediction and see if I'm right the next week or two. But next week, the Feds are meeting with their dot. They got a meeting that they connect the dots to see where their inflation numbers are going to, their target rates. They have this little dot matrix that they have.
Yeah.
That's coming out next week. The Feds are, the Fed minutes are coming out. And I'd be a betting man that we're going to see some, I'll like to come back next Friday and see if I'm right. But I think we're going to see rates kind of get a little active next week, next Tuesday, Wednesday, Thursday.
They're just in a holding pattern this week, waiting for the FOMC meeting, right?
Yeah. So I've been telling people to lock. I mean, any refinances. We saw the bottom, back in the last year, and people are waiting for a refi to get squeeze an extra eighth or quarter. I just don't see it happening right in the short term. Because like you said, based on the chart, when you see certain things getting squeezed right here, you see how rates are moving around up and down, up and down. When you start see getting squeezed, they're waiting for something right in here. So that's my indicator that, maybe we see them. There's, if it breaks this line, obviously this is the next line right here, this straight line. There's a resistance. You see how it there's a different bottoms, how these lines have different bottoms. This line is keeping this top right here. So my prediction is next week we're going to see some interesting things on rates.
Well, of all the numbers that we looked at today, there isn't anything that says that you should sell right away. But if you want to sell, it's still good, and it's going to be good for at least the next 6 months. There isn't anything that says that prices are going to come down, so that you should sit on your hands and wait. So the only real variable that we're seeing is there's a chance that rates could go up a little higher next week. And not a lot, but a little higher. So it's pretty much status quo right now, with hopeful indicators that in 6 months we may be in a better position as far as stopping all of those numbers that I just shared with you, which were the percentage of homes over list.
Yeah.
That's the only thing that the numbers are showing us right now is that the bidding wars may come to a very, may really slow down. At that point, that doesn't mean that that $400,000 house is now 350.
No,
That's
no.
There's nothing out there yet that we see that's showing us that that's going to happen. So, but and also, from my standpoint, 2 weeks doesn't make a trend. But based on what Redfin and the Cromford report is showing us, we do have a trend.
Mm-hmm.
And
Yeah.
and so it's a slow trend. So we'll watch it and see what happens.
You have to go with what you've got. I mean, the trend is your friend, and numbers don't lie. I mean, charts don't lie.
Yeah.
And that's why I was showing you the rate on the rate, the rate chart. That's when I look at rates. It's like, something's telling me that this is gonna, something's gonna move here. It's not gonna stay like this forever. It's not gonna go out here just like consolidate. It's consolidating with the numbers coming out. The Fed's meeting. I'd be a betting man. Rates go up a little bit next week. And like we talked about, bottom line is, I mean, it might cool when it cools off. I think it's gonna be good for the market to cool off and allow people to get in that are serious buyers. It's gonna knock out that speculative. This speculation's got to be kind of topped off. It's got to be knocked out a little bit.
Yeah, I think the people that are going to get burned in this market will not be the person that wrote a decent offer and got a house for $425 when they wanted to get it for $415. It's the people that came in and
150,000
loaded a whole bunch of cash towards it, didn't rely on leverage, and tied up all their money in the home. Mm-hmm. And now the market in a couple of years takes it down maybe $10,000-$15,000, and instead of being leveraged and having that same level payment, you're just watching your cash disappear. And those are the ones that are going to be crying in their beer, and not because the market crashed, because maybe it just stopped its large jump and started to pull back a little bit, because it always does. And you and I said we've been doing this almost a year and a half now, and what we said, and we've said often, is the market always returns to the means. We just don't know how it gets there.
Yeah,
but it always returns to the means. So the young people that are saying, I'm never going to get a house, yes, you will. I don't know exactly when. You may have a delay. This may be a bit of a generational delay. And there's a lot to wrestle with in this economy right now. There's a lot of big problems out there. And
big problems.
There always
demographic things too. The people staying at home, the work. People not returning to work. They're not. They're not going to the office. They're staying at home. A lot of people are renovating. Taking their home and renovating it versus moving. Senior citizens not staying at home and having home in care versus going to a senior facility and not selling their home. So there's a lot of
here's an interesting stat I heard. The baby boomers, right? We were the biggest purchasers of homes, and then the the generation behind us really wasn't. But now the millennials are coming up; they're the biggest buyers, and so everybody's mad at the baby boomers because we're ruining the economy and house prices are too high, right? So the millennials are coming in. I can't find a house. I can't find a house. Well, guess what? When they eventually get in the house, they're not having kids. So the cycle behind them is going to be less buying activity, and your house may not be worth diddly squat if in the next generation as it rolls over. You'll have it paid off, but there isn't going to be a wave of buying activity behind the millennials yet, because they're not having kids at the rate that we old farts did.
But like Barry Habib said, though, that this is his numbers. He looked back in the 60s, 70s, and 80s birth rates. He said this wave that we're seeing right now could be for the next 3, 4, 5, 6 years.
Yeah, that's the unknown. That's we could be muddling along like this, but if we end up with a little bit of a trend towards getting some relief, that'll be great, because it's easier when inventory changes to tell you why it changed than to sit here and try to predict how it's going to happen.
Yeah,
so
exactly.
I just don't have a clue.
But like I said, the numbers are not lying to you. We'll see. We'll keep. And the numbers that we're looking at, you won't hear about them in the news for another 2 or 3 months.
Yes. Yep.
For
so
sure.
When you go out this weekend, you go to a barbecue and somebody says, wow, have you seen the real estate market? Then be proud, because you now have all those numbers. And before you go, hit that subscribe button, but more importantly, smash the heck out of that like button. Actually, just hit it once, because if you hit it twice, it goes like and then unlike. So, but hit the like button. It puts this video in front of more people and lets them know what we're doing.
Oh, wait, what was it? What was that? Just moved it. There was one.
Just moved to Arizona from Oregon. Can you tell
Welcome.
me if Surprise, is a decent area to buy? It seems to be the only area with fiber internet. Chandler's got fiber internet, but Surprise is much more affordable. And Cody, thanks for the super chat. I like Surprise. I like the area. The homes are newer. The prices are good. It's not nearly as much of a knockdown drag out on that we see in areas like Chandler and Gilbert. And you're closer to getting up to places like Prescott, Flagstaff, and Sedona by
Lake
about
Pleasant.
half an
Lake
hour.
Pleasant.
Lake
Yep.
Pleasant. Yeah. It's a great area, Cody. I think you'd love it.
I think, I've been here 34 years, and, to be honest, my honest answer is back, and correct me if I'm wrong, this is just my take on it, because I've been here, like I said, 34 years, and I've lived in Tempe, Phoenix, Chandler, all over. I lived in Northwest Phoenix. Surprise was kind of a bit of a, we're going to, 10, 15, 20 years ago, it's kind of like, it was
nothing going on out there.
I always joke about that. They always call it Surprise for a reason. Surprise. But
nothing here.
Yeah, but I tell you what, it's a kind of a it's being built up. Things are newer.
Schools
nice
are
neighborhoods. It's really catching up very quickly. So I think you'd be pleasantly surprised. No, excuse the pun. Pleasantly surprised out there, because like I said, it used to be kind of a, for lack of a better term, bottom of the barrel city. That's a bad analogy, but it's really flipped it the last several years with the new developments that they have and the infrastructure that they're putting in. So it's kind of a hidden gem in the Northwest.
Yeah, it'll be nice. So good luck out there, Cody.
Well, by the way, the 303 helped too. The 303 freeway.
Oh, no doubt. Yeah.
That helped a lot. And there's a lot of stuff going out there, on the 303. So it's definitely, there's a lot of infrastructure being built along the 303, I guess. So
unbelievable amount of huge, largest warehouses I've ever seen in my life on the 303.
Yeah.
I don't know what they're putting in there, but you need a car to get around inside those warehouses. So they need light rail inside the warehouse. So
running at altitude. Thank you. Appreciate that. Thank you.
So
kudos.
Yeah, thanks a bunch. Hey guys, we're going to scoot, and everybody have a fabulous weekend. Pat, thanks for joining me again. And we could share some camping adventures. Everybody went out and tested my trailer, and nothing broke. So all right, talk to you soon.
All right, have a great weekend, everybody. Take care.